Good morning. My name is Jim O'Brien from Wyckoff StockMarketInstitute.com. Today I'd like to talk to you a little bit about the Optimism Pessimism Index. The OP Index is simply a measure of volume. Wyckoff analysis calls for identifying the individual waves, both up and down, that develop during the trading day. Mr. Wyckoff was the first person to include volume studies in technical analysis. They were extremely important to Mr. Wyckoff and continue to have a strong impact on determining a stock's future path or any change in direction. The Optimism Pessimism Index is relatively simple. The up volume from an individual wave is added to the OP index. Conversely, down volume is subtracted. The actual OP number is not relevant. It is its relationship to previous readings, especially when the market reaches support and resistance points, that make the Optimism Pessimism Index an extremely valuable Wyckoff trading tool. The purpose of the OP Index is in its relationship with the price action of its related stock. The price action is shown on a vertical line chart. The Optimism Pessimism Index reading reflects the amount of effort going into moving a stock up or down. The vertical line chart reflects the results of that effort. These two readings either move in harmony or out of harmony. When they are moving in the same direction, they are considered to be in harmony and having harmonious action. This suggests the market will continue to move in that particular direction. Sometimes the Optimism Pessimism Index will begin to lead its associated stock or index. While both are in harmony, the OP index is noticeably stronger than the price index of the associated index or stock. This means there is increased upward pressure on that stock or index to continue its move either up or down. The opposite is true during a reaction. The opposite of harmonious action is inharmonious action. Inharmonious action can appear in two ways. If a stock reaches a new high or a new low, and its Optimism Pessimism Index does not do the same, it is considered a negative or positive divergence. If a stock reaches a new high or low, but its OP index is noticeably stronger or weaker, it is considered a negative or positive inharmonious action. This is where the OP index can be extremely valuable in helping determine turning points. This video will review the different relationships between a stock and its Optimism Pessimism Index.
The first example is found in United Technologies, symbol UTX. In late December 2015, during a fairly long decline, UTX rallied to point A. Then it continued to react and went through a selling climax at point B. Then the stock moved sideways in a trading range and experienced a spring at point C. Notice that despite the spring, point C is slightly higher than the actual selling climax at point B. However, the OP index is lower. This is a positive divergence and, coupled with the spring, makes this an excellent entry point. United Technologies rallied on a sign of strength to point D. The closing prices in the area of point D are in the same price range as UTX was at point A. Notice the Optimism Pessimism Index. It is quite a bit higher. Either this is a negative divergence or the index is leading the stock. Based on the negative divergence and the high volume and wider price spread, this suggests the presence of supply. Short-term positions could be closed. However, the longer-term investor may choose to watch the expected reaction and see if there are any more opportunities to the upside. The UTX Optimism Pessimism Index reading is higher. After a 2-day reaction to point E, United Technologies rallied to point F. Note that while point F on the price chart is lower than point D, this is a second negative divergence. It is a continued indication that the effort going into moving the OP index higher is not being matched by the stock's performance. While this is not an automatic sell signal, the wise Wyckoff trader moves stop orders and pays fairly close attention to market action. United Technologies continued to advance to point G. Notice the relationship between the stock and its Optimism Pessimism Index. The effort, marked by the OP index, has been withdrawn. While UTX advanced, its OP index moved sideways and is now lower than the vertical line chart reading at point G. This is another negative divergence. I call this a double divergence. First, the OP index was stronger than the stock price. Then the stock price was stronger than the OP index. In almost every case, when this situation occurs, it is extremely difficult for the stock to continue its rally. As you can see, United Technologies reacted and began a sideways movement that is still continuing. Walmart is an excellent example of how a negative divergence can point to the beginning of a significant down move. Walmart rallied to point L, reacted to point M, and then continued to point N. Notice that the OP index did not follow suit. As you can see, it was noticeably lower than the stock at point N. While there are other indications, this helped indicate that Walmart was going to react, and react it did. The stock lost over 35 points in less than a year. In addition, Walmart's Optimism Pessimism Index was leading the stock throughout the decline. This gave those who traded the stock short a bit of comfort that the reaction would continue, in spite of Walmart's relative strength on its downward trend channel. The relationship between a stock and its OP index can be extremely helpful at the end of a trading range. IBM had a selling climax at point A. Then it moved sideways in a trading range until it sprung the range at point C. The spring caused IBM to move into new low ground. However, notice the OP index. At point C, it is noticeably higher than it was at point A. IBM responded with a 30-point rally. The Optimism Pessimism Index was extremely helpful to Wyckoff traders, monitoring a 30-point rally in Caterpillar. Caterpillar began a significant rally at point A and broke its downtrend channel on the reaction to point B. Then it rallied nicely to point E, reacted to point F, and rallied again to point G. Notice that while at point G, it was higher than point E on the vertical line chart. The OP index reading was noticeably lower. The effort to advance the stock was deteriorating. Again, this is not an automatic signal to sell and take profits, but to realize that a change in character may lie ahead. This change occurred in the area of point I. There, the stock price on the vertical line chart was only slightly higher than it was at point G. Yet it was noticeably higher on the Optimism Pessimism Index. This is a negative inharmonious action. It shows that despite a concerted effort to move the stock higher, as shown on the OP index, Caterpillar was unable to make much progress. This, coupled with the stock's inability, for the first time, to reach the trend channel supply line, sent a negative signal. This suggested that the Optimism Pessimism Index was not leading the stock. Notice that Caterpillar quickly reacted and broke the upward trend. Inharmonious actions are not as significant as divergences, but when they are combined with another Wyckoff signal, the inability to reach a trend channel, support, or supply line, they become much more significant. Southwest Air is an example of a positive inharmonious action that pointed to an entry point and a negative divergence that suggested position should be closed. Southwest Air reacted nicely to point A. After a brief sideways movement, supply remained, and Southwest Air reacted to point B. However, While point B on both the vertical line chart and the OP index chart are lower than at point A, it is not that great on the OP index chart. This suggests that despite the wider price spread and volume, the effort to push the stock lower is being reduced. Southwest Air responded to the positive inharmonious action with a nice rally. Although it was still in harmony as the stock reached point C, Southwest Air was unable to reach the uptrend channel supply line. The stock continued its rally to point D. As you can see by comparing the vertical line and OP index charts, there was a significant negative divergence. This broke the uptrend, and Southwest put in a nice reaction to the $36 level.
These are just a few examples of the continuing relationships between an index or stock and its Optimism Pessimism Index. It is extremely important to understand that these are not mechanical indicators. They are simply one of the many Wyckoff tools that help the Wyckoff student analyze the markets and make buying and selling decisions. Market analysis is not looking for automatic buy and sell signals. It is reviewing supply and demand through the prism of these wonderful Wyckoff trading tools and coming to a knowledgeable conclusion. I hope you've enjoyed and perhaps learned a little bit about the Optimism Pessimism Index and how it interacts with the vertical line chart readings of a stock or market index. There are lots of trading opportunities waiting for you. In addition to the OP index, you can find them by using the profit-making Wyckoff strategies like relative strength and weakness, trends, trading range phases, springs, upthrusts, opening and closing positions, and many, many more.
They are all found in our Wyckoff ebook entitled Wyckoff Strategies and Techniques, Finding and Trading Winning Stocks. The book is an updated version of the more expensive Wyckoff course in stock market science and technique, but it's available for only a quarter of the cost. And, as a special bonus, a free audio recording of the ebook is included with every purchase. The audio recording has its own set of charts, and these make it easy to follow along as you learn more about these wonderful Wyckoff trading tools. Learn about how to make better, more profitable trades by using these time-proven Wyckoff strategies and techniques by simply clicking the link below.